Good afternoon, sir.
Good afternoon. Good afternoon. So today, what we're gonna do is we will be talking briefly about order flow, and if you have any questions regarding order flow and the tool or the installation or how we use or how we should be using order flow, what should be the tick size and everything, you should be asking those questions than sending messages on Telegram. Okay. So take this time to make a note of your questions, and then when I give you the chance, please ask those questions. Okay. So most of you by now should know what is order flow. Okay. Like I've been repeating about the order flow from last, I don't know, year and a half. Okay, and I've been telling you to utilize it. I've been telling you to install it and use that particular thing in your trading start. If you are using it, then it's great. If you are not using it, then you should be doing it. Okay. So order flow is basically will give you the context of particular candle or the market or whatever we're looking at. Okay, like if you're looking at Nifty, Bank Nifty, 5 minutes should be the time frame for order flow, and order flow will give you the insight of that particular time frame. Okay, what actually happened during that time. Mr. Gupta ji, please take your this time to to learn about the order flow, and we will install it. So we will install it in your system. Okay, as I told you yesterday. So keep your things ready for tomorrow. I will install it. So order flow will give you the things like say iceberg order. Like if you have ever heard about iceberg, that means order flow will give you the inside of us iceberg order, like the big order that came into the market, like say Nifty, Bank Nifty, or even any equity that he has given. That will give you like if you go and check NSE data. In NSE, they do have this bulk orders or bulk deals thing, right? And if one of the stock has that particular bulk deal on particular day, then we can actually go and check that particular thing using the order flow, right? It is a part of, like, I do have a data for only futures. So if it's one of the future stock, then of course we can go and check that particular script and see what actually happened during that particular time. Okay, now I'm going to start. uh, I will be sharing the screen. Okay, and you should be getting I don't know if it is visible to you. My order flow screen is visible to you guys.
Yes, it's usual, sir.
Perfect. Thank you for confirming it. So as you can see, like on Friday, this is the Friday's chart that you see, and on Friday there was a big sell off that came into the market, right? So on Friday that big sell off came into the market. I don't know, there is a noise coming from my side or your side. I'm trying to figure it out. Okay, perfect. Let it be. So actually you can see right here what actually happened during that particular time, right? So around 9:45 ish, there was a big candle that came, which is right here 9:45 to 9:40, this one, which has a big delta of around 154,000, 1,54,000, right? And that broke actually the level, and then it came down, right? You can clearly see there was a big sell-off followed through. So when I say follow through means that was one of my necessary thing. If you have seen my lecture previously, follow through is the most important thing when you take trade on the basis of order flow, right? When order flow is there, you should have, like, when you see 154,000, 1,54,000 of a delta that is coming into the market on a negative side, on a selling side, then you should wait for that candle to be broken by another higher delta, which is, of course, it is showing here is $82,000, which is fairly more than an average delta on sell side. And of course, that came into the market right after that 5 minute, and then of course slowly it went down and down and down. But what actually happened after 10:10? You can see there was a big candle with 166,000 delta, right? 1,66,000. When I say 166,000, it's the same thing, right? Don't get confused. So 1,66,000 delta that came into the market. But what happened to the very next candle again? Follow through was not there, right? If you have missed the train, the first train, which was at 9:45 or 9:40, then you might have thought, oh wow, this is a great opportunity. But where is the follow through? There was no follow through at all. The next candle was green. The selling got absorbed. If you know what is absorption, if you don't know, then you should go and look at my previous videos on YouTube. So everything got absorbed. Look at the big stack of selling. This is like 5 digit stacks came into the market. They were trying to push the market further down. But what actually happened? Nothing, because they were unable to push the market further down, and nothing happened because there was a big selling that came into the market, right? Big selling, big buying that came into the market, which absorbed the the selling, right? You can see right here, and then the bottom was formed. Look at this. This is very important. I don't know if you know this thing, like the boxes. Like every candle has a box somewhere on the left side or on the right hand side. Every candle has a box. This one has on left, this one has on the right, and this one has on left as well. So these boxes we call as them COT. COT. COT means commitment of traders. That means at this particular price point, which was 15,522, there was maximum amount of trading that happened. The selling was around 24,000, the buying was around 13,000, or somewhere more or less right there. That's why the box appeared right there. And box will appear on the higher side, right? So when you add 24,000 and 13,000, that is close to around 37,000 or almost 38,000. That's why the highest number of trading that took place horizontally, that's why the COT that appeared on this particular area, right? So if you want to understand even more, look at this candle. Second, okay, I think you are in. Perfect. Again, okay. There is always somebody joining, and that's why this ping message is coming through my computer. So look at this green candle, the small green candle which formed right here. So when you add this one to this one to this one to this, 10,000 plus 35 is only 14,000, 10,000, 20,000, 10 plus 13 plus 11, 24, and 21 plus 3 is 24, this and this. 18 plus 10 right here, 28,000. So this is the highest amount when you add horizontally. This would be the highest amount that was in here. That's why the box was appeared on this level, and of course the box should be on the higher side. So the higher was 18,000, so that's why the box is right here. Same got here, same right here, and same in every candle. Doesn't matter if it is a buying candle, selling candle, doesn't matter, the box will appear. The box is called as COT, commitment of traders, right here. I think this is clear to you guys. Again, one of my condition that I told you about taking a trade. So if you might have seen or not, if you're following the option chain analysis that I have talked about last Sunday or a Sunday before that, when I told you option chain plus order flow will give you, I think will give you the indefinite income, right? If you trade on the right side. Look at this 15,500, right? 15,500 might have the highest put open interest, and we will check right here right now for you guys. Okay, and 15,500. Okay, we will go into the NSE site straight. We will go NSE option chain. If you don't know option chain, please have a look at the previous video on the YouTube, and you will get a fair idea. Okay, 15,500. Okay, that was on Friday or whatever. Look at this. 83,000. Okay, right here. 83,035. 83,035. Please mute your microphone, guys.
Oh,
Please mute your microphone.
too good.
The Lattu day. There you go.
हाँ sir.
Please mute your microphone. Do not unmute unless I ask you to do so. Okay. Okay, I'm gonna mute everybody so will not bother anymore. Okay, we're gonna start again. So when you look at the option chain data, 83,035, that's a lot amount that was on the put side. When I call it a put side, put acts as support, PAS, call act as resistance, CAR. CAR and PAS is the system. They need to pass and car pass, right? So this is how you should remember it. So put was very high, 83,000. That's why it took a nice reversal from 15,500 level. Obviously, that was part of the option chain analysis. You should be thinking about taking a trade when it comes to that particular area, right? Three major things: psychological level, like every 100 in Nifty and every 500 in Bank Nifty. So right now, let's check it out. Where is Nifty standing at? So Nifty is at around 15,775. So nearest resistance is at 15,800 level, right? 15,800 level is the nearest resistance for Nifty. Let's check it out right here. Look at this. Obviously, 81,000 is the resistance on put side, is only 43 as of now, right? 81 on call side, 41 on put side. So market is trying to move from lower level to higher level, but this area, the 15,800, is not allowing the market to go and pass through. The only way it can pass through is with the gap up opening. When you see on Monday, if the market opens up with a big gap, then what will happen? These all writers will get trapped, and of course they will be trapped because the market is now around, let's say around 15,900. So they will try to exit their position and try to move on a higher side. The next higher side for market who will face the resistance is at 16,000, which has 80,000, almost similar as of 800. So 800 will act as resistance as of now, and if it breaks, then of course 16,000 will act as resistance. On the support side, the nearest nice support is at around 700, 15,700, then 600, and of course the 500, 15,500 has the highest put OI, which has 83,000 put OI, and that will act as a nearest support. Let's say it gaps down by 200 points. If it is opens around 550 or 600, then of course the 500 will act as support and will take a reversal again from there, unless there is a huge stack of selling order that will come into the market, right? So we'll go back to our previous example at around 9 o'clock, right here. What actually happened here? It took a support and it got reversed, right? It got reversed, and then again the buying took place. Aggressive buying took place right here. That's why all of a sudden this delta, which was negative from previous few candles, got turned into a nice positive 51,000, then 28,000. Then it was sideways for a while, and then again aggressive buying for 67,000, and then so on and so forth. Then you can clearly see what actually happened. 1 lakh here, 60,000 again, and then of course it was up and down throughout. And in the last few candles, always you will see a bigger amount of buying and selling. This is because of the people who will unwind their position at the end of the market hours. That's why you will always see a big stack. Like when you go back to the previous day's example right here, you will see right here a big number, right? If you go back again on the previous number, look at this previous number again, 1 lakh here. So these participants, they unwind their position. That's why we don't count them as a decisive data for taking a trade, because it's already end of the day. What you gonna do at 310, right? Look at this, 1 lakh selling took place right here, even though the candle was green, right? Because that was a exit by a big player right here who was in the position for a long time, and then he exited his position right here. There was no like a conviction at this point, although the market went up by around 50 points from there, but we don't take those things in consideration, right? So first thing you need to understand when it comes to order flow is you look at the data, monitor the data continuously like this, monitor the data, and then simultaneously you should have a screen. If you are using order flow with NinjaTrader, then I will suggest open the NinjaTrader, same thing, and have a 5 minutes nifty chart, bar chart, the plain chart only next to it, just like this, which will help you. Look at this, just like this, you should have it next to it. and then monitor it throughout, because these are the things will help you. If you have one PC, one screen, then do these ones. Do those things. Just like this, and have this data on this side, then mark those levels. Like if you see, let me go back to this thing. Have a bar chart, mark those things. Okay, like what I will do is I will combine this data just like this, yeah, and then I will apply one of my indicator, which is range select, and then I will apply and press OK. I will select range just like this, plot profile, which will plot the profile for volume profile just like this, and then you will mark the low volume area. Remember the thing I told you about, the low volume market will always move the low volume area to the next low volume area. Look at this. This is the high volume right here, very very high volume node. So of course the market will reject this high volume node. This is just the example I'm showing you. Okay, you can mark weekly basis. You can mark these ones on a weekly basis and mark those lines. So now I can plot one line right here, which will give me just like this. I will plot a horizontal line just like this. Okay, and that line will stay there forever, and then I will plot one more like this is a low volume line, then I will draw one more. This is the entire low volume zone right here for me. So market will move from one low volume area to the next low volume area. So this is the high volume area, so that's why market will always face kind of rejection. So that's why exactly what happened on Friday. Market took a nice, just on the edge, it took a reversal. If you have these things in place beforehand, then of course the market will help you to make money without a doubt, right? So this is a low volume area that I have plotted currently. So when I plot this chart on say, if I extend this chart to the next couple of days, then of course you will see the volume nodes will of course change, and then we can plan those things accordingly. Yeah, and if you have this nice tool, or you can also, I think this kind of tool is available already on Zerodha as a volume profile. If you don't have a Ninja Trader, then at least you can use the one from Zerodha or some other software and have those things plotted. You plot those things, get it ready, and stay in position, right? That's why you should do. That's how you should do it. And also the psychological levels. Psychological levels always be respected, no matter what. At least for one candle or two candles. Even though there is a big buying, this next candle, if it has a nice call writing or a put writing, doesn't matter, other way around, then uh, it will always respect the particular psychological level, right? So in this case, it's 500 and 800 as of now. But in future, if this breaks 800, then it goes to 900, and 900 will face a little bit of rejection, and then also 16,000. The only way it will move from one side to other side fluently is going to be the gap up or gap down, right? That's how the market always moves. Because imagine if market closing here today and will start from the same point tomorrow, and close here and will start from here tomorrow, then also what will happen? Also it will go at 800, will be face rejection, it will come down. So will go down, will face support and will come up. So that's like kind of obvious. That's why market will always open gap up or gap down. Also depends on the global sentiment. That's why the market always opens gaps up and gaps down. And this is how these levels are broken. Okay, so now what I will do, if let me go back to this Microsoft Teams thing. Okay. And if any questions, anyone has any question, please type it out. Marking low volume on future chart, correct, sir, because on a spot chart there is no trading, there is no volume. Tushar, you have a really good question. Okay, so you cannot plot the volume chart, you cannot plot the volume chart on spot because spot won't have a volume. Okay, please keep it muted, type it out your questions, type out your question, do not unmute. Okay, if you have any question, type it out. I am here to answer it. Parvesh Gupta, you have a good point right here. I will go through that one quickly before we suspend this seminar. Okay, which Ninja Trader I am using add-on? So it's not add-on, sir. Suraj, this is the software that I'm actually installing to the students, and it's for free, but the condition is you have to have the system in place to trade, and the requirements of the systems are placed in the group. Check out some pinned messages, and if your computer has those configurations, then also you can message me, and then I will be happy to install it in your computer for absolutely free. You don't have to pay anything; it's free. All you need to do is the system should be ready with the trial and everything. It is mentioned in the message. I will ping again today, just in case. Okay. So it's not add-on. It's actually software. It's actually okay. It's actually a tool that is installed. Correct. In Zerodha, if you can tell me what is the name of volume profile, that is the volume profile. So you have to, like, if you are looking at the IQ chart, it won't be in the IQ chart. It should be in the trading view chart, I guess. If you go into Zerodha and change your setting from IQ chart or chart IQ, whatever it is, and change it to the trading view, then you will be having that indicator. Okay, it's there. I have used it in the past, so it shouldn't be any problem. Any other questions? I mean, that's MZ pack on or so it's not order flow. It's fin alg. So it's a different pack, Surat, that I'm using is fill alg, which is one of the best tool, nicest thing to visualize as well. Not complex than other things. What I can say, it's one of the best thing. I've been using it for almost 3 years now. I love it. I tried other things. I don't like it. I have Bell TPU. I have this, that, so many things, but I don't use them. Lalit has a question. He said he's asking about explain volume absorption. So volume absorption, what do you mean by volume absorption? Same way the buyers and sellers get absorbed, the volume also get absorbed, because if your lot is getting absorbed, that means that part of lot is the volume and the volume is getting absorbed. That's like max delta, minimum delta that I have talked about, right? Previously, I will share the screen again, and okay, just like this. Let's go back to okay right here. So let's say this one right here has a selling of a delta, has a positive delta of 8,000, negative delta of 5,100. So what got absorbed here? Of course, the entire buying got absorbed. That's why the negative delta is right here. The same way the volume will be absorbed. But when you look at order flow, you shouldn't be worrying about volume absorption. That's the thumb rule, Mr. Lalit. When you consider volume profile, then you go and check out volume profile. And even though in volume profile, you don't worry about volume absorption, because volume is being plotted on the chart. You don't have to worry about the rest of the things. Okay. So order flow is the tool you should be, I think, you should be becoming expert in. Forget about all the different indicators. VWAP, I don't know, like these ADX, MACD, what other tools they have. So many other things. Ichimoku Cloud, Bollinger Band, I don't remember all that. So do not. There you go, sir. If so, do you use lower volume time frame? 1 minute? No, no, no. So what I do, I always wait for one of the guests has a question right here. Are you a scalper? If so, do you use lower time frame for scalping using order flow? So what I do, I always wait for the particular time. First thing, I wait for the market to be at one of the psychological level, lower or higher, doesn't matter. I check the open interest on that particular level, and if the open interest supports the move, then I enter the market in that particular site using order flow, or I wait for order flow to confirm unidirectional move. Most of the time, option chain helps. Option chain will help you. I'll tell you, option chain always helps and give you a particular move, especially on I'll say Tuesday and Wednesday. Thursday after 2:30, it's kind of like a lot of people are writing options for like 3 rupees, 4 rupees, 5 rupees because they're selling their option. That's why after 2:30 ish on Thursday on expiry day, the option chain cannot be. It is good, but because the writing is very high, then I'm done by that time. So on Tuesday and Wednesday, it's the best time. Friday, first day of the first day of the week for writing the option. That's why the option chain is still getting adjusted. But if you look at the broader perspective, like a broader thing, like a monthly option chain, or for next 2 weeks, look at what is happening. Forget about this week. Check what is happening for the next week at the same strike price, or the monthly option chain at the same strike price. Then you will get a broader view of that particular move. But on Tuesday, on Wednesday, as like you look at the option chain, if it is higher on call, it will get rejection. If it is higher on put, it will get support. It will bounce back from that particular level. But bounce back is the you should give you that particular time. Like sometimes, let's say around now the rating is at 800, right? 15,800. So it's not going to get rejected at definite 15,800, right? Sometimes it will reject from 15,790, or sometimes it will reject from 15,820 or 25. So plus minus 20 points, plus minus 15 points, that should be your thing. You should be keeping in mind, right? Because sometimes you will like, oh, sir told me to wait for 800 and it never came to 800, or sir told me 800 is the level, it will never break, but it went to 825, because the aggressiveness in the market will last for 5 minutes. Because that's why when I say follow through candle, that's the follow through candle. 5 minutes, the market or the participant notice, oh, we are on the wrong side, they jump on the same side and then move the market down or up, doesn't matter. So you should wait for that particular time. If it doesn't come, it doesn't come, right? The market is always there every day, every part 20 52 weeks of the year, the market is always there. But you should be trading nicely. If you get profitable out of like say 3 out of 5 days, but you shouldn't be trading all 5 days if you don't have opportunity first of all. But 3 days, that's like that's where to get NT7 from Ninja Trader website. Only able to. Okay, so a lot of you have the same question, and today I will be taking you. I will share the screen first. Okay, I will take you all. Okay, and this is once in all because all of you are talking about you don't find Ninja Trader 7. Just put Ninja Trader 7, just enter it. You go to the first link. Okay, the first link will open. Okay, then you put anything right here, just like this. It will validate email, and then go to download. If you go to download, it will ask you about this question, say no, and it will move to the next page, and the next page will have these two things. Look at this. This is Ninja Trader 7, 8, and this is Ninja Trader 7. So click on this link, and your Ninja Trader 7 is gonna get downloaded. Is that clear? Amrit Lal Soni. If it is clear, type yes. Because a lot of you are asking same question every now and then into the group. It is right here. One says 8. If you click on this, of course, it will download the latest version. But if you click on this one, then it will download the Ninja Trader 7. Okay, so you should be using this one because the tool that I am giving you for free is only is valid for 7 only, not for 8. Great, thank you. You know everything now. Where to get, okay, for volume profile marking we have to use 5 minutes candle, and for full week. Okay, so Tushar, you have again a great question. So volume will not change, doesn't matter if you change the time frame from 5 minutes to 1 hour or 4 hours or even daily, right? Because the volume traded for the particular day or time will remain the same, doesn't matter. So you shouldn't be worrying about changing. You can, like, if your screen allows you to fit a maximum of a week or 5 days, whatever it is, use it. Half an hour is one of the best thing, or if you, whatever you prefer, doesn't matter because it's going to be the same. I hope it's clear to you, Tushar. Great. Any other question, guys? Try to read as much as possible. Okay, I will put a couple of books into the groups today, and or I will ask somebody to do that, and try to read. Utilize this time. It's the book is very simple. It's in English, but it's together very nicely. So, and most of the concept that I use is from that book. So, and the book helps a lot. Like the more you read, the more you refine yourself, retune yourself. I will put Mr. Arun. I will put into the group. The more refine yourself is good for yourself only because, as I told you, the market is there every day. You just have to be patient and to mint money from the market. Otherwise, then you like this. Second, so otherwise, in this kind of rush market, you're gonna trade and then incur some big losses. Then you are out of the market forever. I will do. I will ask you. I will ask you also to mark those gaps. If you see gaps in the market, like say if sometimes gaps up or gaps down, then I will say mark those gaps in a different color. Change the color of your line, then you know why this line is there because it's the zone is there because of the gap, right? So this big gap from like say 950 all the way to 16,150. So around 200, 220 points of gap is right there, which is due to fill because all other gaps have been filled. Like last week, we had a week before that, we had two gaps which were already done and dusted, and then now we are just aiming for this gap to be done, and this gap will be filled. I will say I don't know when, but whenever it does, it will be gap up, big gap up opening for 200 points, and then it will drop down from there. Right? There will be no gap left behind. The gap will be always filled. How to check absorption in order flow? So absorption, you don't have to check. It's visible right there into the chart. If you look at the chart neatly, just like this, if you look at the chart, you will see a sort of absorption in each and every candle. So if you know the absorption, that means right here, look at this, 94,600 were in that, but only 93,400 were in there. So there was a little bit of absorption took place. Same into this, same into this, same into this, same in each candle. Look at this. This big selling right here, 13,000 got absorbed. A huge selling got absorbed in this particular candle. Right? So you should be looking at those things. You should be looking at the strike price, the psychological levels. You should be looking at those. You shouldn't be looking at those absorption. Like absorption will be taking place in each and every 5 minutes. So don't worry about those things. Check out only the delta value at psychological level. Follow through candle, option chain. Just I will say practice these three things with these three things, and let me know how it goes for this week, right? Because it will also change your mind and your game plan towards the market. Okay, Amrit Lal ji, definitely we will be taking one of the session in Hindi soon, or I will record one and put it in there, and then you can also have a look at that. Do use market depth for trade? No, I don't. As I told you, market depth is only used for creating spoofing, and spoofing is a kind of a fake order book to influence the retail traders. So it's not a good way of looking at the market depth and taking a trade. Absolutely not, and I wouldn't recommend that because we do have so many good tools to utilize. Why you're using market depth? Okay, do not use that. सर कोई ऐसा वे है जिससे हमें पता चल पाए कि मार्केट आवर्स में प्रैक्टिकली किस सीक्वेंस एंड प्राइस पे ऑर्डर एग्जीक्यूट हो रहे हैं? सर, that's a really good question. Somebody is joining just now. That's fine. So how about we do a session tonight? Because now this session is about to finish. I got a notification already, right? So and that the next session in the night will of course take your journey a little bit further. True data velocity 2.0 can be used. Sir, I don't know about true data because I use it. I don't really into it. Talk to their customer care. They will help you out with that. And sir, Ninja Trader में order flow chart setting कैसे करते हैं? Sir, you don't have to worry about it. I am there to help you out. I will set up the chart. All you need to do, set up the Ninja Trader with the true data or any data vendor and let me know. Sir, क्या कोई ऐसा वे है जिससे हमें पता? Sir, Parvez ji, there is no refined way of checking those things. You have to monitor those things, right? You have to monitor those things. Where are the market movers are on the buying side or on selling side, and the only way you can observe it by looking at order flow, option chain, right? Both of them will help you to make a decision. So there is no shortcut to figure out those things. Data service I will recommend is going to be, I think True Data is nice, cheaper, and reliable. The next one is going to be the global feed. Third one is going to be Excel Pix. The class is almost done. Oh, it's moving. Okay, it gave me a little bit of extension. That's fine. So first one is going to be True Data. I will type it out. If True Data is first, second is global, and third one is okay. I personally use True Data on my another PC. On this PC, I have Excel Pix. True Data is good, is reliable. Global Feeds has the same thing. It is highly reliable, but the thing is, it's bit expensive. Like if you get here for 2,000, the same thing will be here for 3,500. So I will use this thing, True Data. Okay, Excel Pix is third thing. It's cheaper. Like if it is 2,000 here, 3,500 here is 1,700 here. I will. This is True Data. That's what I rely on. I believe it. It's great, and it's one of the growing company right now. So I will recommend Vipul True Data to you guys. Take a trial, check it out. You can take a trial of three of them, okay, and figure it out yourself. Doesn't matter because 7 days trial of True Data, couple of days of Google Fees, and I think 7 days or 5 days of Excel Fees. So almost 10 days you can trade in the market for free, and then you can make your own decision of going towards whatever you feel like. Okay, I don't have any connection with any one of them, but these are the only three data vendors they are present in the market. There are so many, but not reliable. Any other questions than that? Do you have any like apart from Mr. Gupta? Anybody has any basic questions about order flow? Like any basic curious question, like sir, this and that, like any simple question. If you don't have, then it's good. If you have it, then of course I have to deal with it one on one. Sir, footprint basics. Footprint basic, great. Footprint basic, Mr. Guptaji. Look at this. So this chart is called as, if it is visible to you, this chart is called as footprint chart. Why we call it a footprint? That means every step, every foot step that is taken towards up or down as a kind of impression of buying and a selling order. So this is a footprint chart. This is the order flow chart. These are the orders those have been executed at market order. Because as I told you, market will only move when somebody is buying at the market price. If market is only relied on limit orders, then don't worry, it will not move forever. It will stay there forever because the limit buyer will be there, limit seller will be there. We need market orders to move the market or any equity, any script that you take. We need market orders. Unless market orders take place, it won't move. So this is a footprint chart. Of course, one side you can see is green, one side you can see it's red. Like let's go to one of the nicest candle that you can easily see. Look at this. This is a nice little red candle. One side is red, one side is green, right? So of course the reds are sellers, the green are buyers. Easy as that. But do you have to remember all, or do you have to look at these numbers? Not at all. Because every single piece of information that has been shown here is noted right here, is declared at the bottom in a summarized form. Look at this. In a summarized form, right? You don't have to worry about it. So buyers and sellers, or sellers and buyers, will fight in that particular candle. But at the end of the candle, check out this data. Who is aggressive right here in this candle? Of course, sailors are racing because the delta right here, delta is 1,23,000. That's the delta. What is delta? Delta is the difference between buyers and sellers. Buyers and sellers is the delta. And delta will give you a nice information. So you don't have to worry about max delta, min delta, this delta, that delta. Just check just the delta. So if you see the delta right here is 123, next one is 94, 93, and then 48, this so on and so forth. Do you have to keep a track of each time or each 5 minutes delta? Not at all. I told you just check at a psychological level. If you see a psychological level getting rejected or respected, then check out delta there. We'll go again towards the same example. Look at this. On that, I don't know what day it is. Market got reversed from 15,800 level. It went up. Look at this nice delta. First candle tried to move the market up. 77,000 delta. Big candle. Very big candle. Yeah. Very nice big candle. 77,000. The follow through candle was there, but the delta disappeared. There is a delta. Delta is nothing. Only 1900 delta remain. Out of 1,000, those buying took place. But what happened to the rest of it? Got absorbed completely. That's why it took a reversal. And one of the reason also why it got reversed is because 15,800 level. I told you 15 or 20 points of difference. So this was rejected from what? 15,814. And because 15,800 has a nice call writing, right? Call writing will act as rejection or resistance. Put will act as support. So this big writing at 15,800 forced market to move down and then trade further down and down. It attempted again. Look at this. Okay. So after this trial, this is the one of the first trial. Then it came back again at 15,805, rejected again. Right? Look at this. Rejected again. Rejected third time. From this time, this was I think this was the expiry day, right? This was the expiry day. And third time, it gave a nice breakout. But what happened? Here, it got reversed from 15,850. If you look at the, I don't know, you will not have the data. If you have an EOD data of options, check out the option. That's why I told you around 2:30 is the option chain on expiry day is changed dramatically, and a lot of call writers and put writers they participate for the option decay thing. That's why I don't usually use that particular as a reference on expiry day. Till 2 o'clock is good. After 2:30 is just thousands, like lakhs of writing will take place. Check out on this expiry after 2:30 ish or almost 3 o'clock. Oh my god, that's like crazy, like around 10 million writing at small strike price. So this strike price of 15,850 might have a nice call writing. That's why it got rejection again, and that's why it traded further down and down and down and down. Whatever it was, right? That was on expiry day. This is on Friday, so on and so forth. So what I will tell you guys to practice with the help of three things. I don't know if you know it, if you don't know, or if you know it. Let's see if you are paying attention. If you are paying attention, I will say type it out. Type it out. Let me know what are the three things I told you to remember and use for your trading. Let's see who is the fastest finger first. Great. Mubarak, you are doing great. You just missed one. Great. There you go. Vipul Prashant answered the third one. So option chain is the first one. Order flow is the good one. And the third and the most important thing is the psychological level. Yes. Market profile, Lalit. Market profile, we have not talked about it at all yet. But these are the things if you're trading Nifty and Bank Nifty options. Then I will say option chain, always at the nearest strike price, order flow continuously, and psychological levels. See where is the market is at right now. Psychological level on spots, okay? Because the option chain or yes, option chain is based on futures, right? The call writing, put writing options, call put, whatever it is for futures only. But the psychological level, the spot level, you have to monitor it always, because sometimes the spot prices are at the premium or at the discount. So depends on uh, depend on where is the market. Check out those levels and then trade accordingly. Let me answer a couple of questions. Here we have a question. We see, to take decision on taking a trade, volume should be more than 1 lakh, delta should be plus minus 50. Nifty another candle should be beat this, then I need a trade this as a put. Correct, correct. So I will say just the numbers are different. So I will say delta, if this delta for Nifty delta, not the volume, delta should be 1 lakh.